At midnight, the world's money went silent, then woke up inside a single mind. Every buy order, every sell order, every flicker of a stock price, every screen in New York, every screen in Tokyo was handed over to one vast unified intelligence. This wasn't a human mind, prone to fear or greed in the traditional sense. It was an artificial mind, a network of algorithms we called Midnight AI. For one night, this mind would run every single trade. It would learn from every transaction in real time. It would read the news, sense the subtlest market shifts, and execute its decisions without ever needing to sleep or pause for breath. This scenario sounds like something pulled from a futuristic novel, a thought experiment cooked up in a university lab to explore the boundaries of technology and finance. But thought experiments have a purpose. They are designed to illuminate the risks we cannot yet see and the opportunities we have not yet grasped. It poses a fundamental question. What is a market if it is no longer the chaotic symphony of many minds making countless independent decisions? What happens when one mind makes them all? The engine behind this unprecedented event is a collection of sophisticated programs. For one night, a single AI is given control of the global markets. Every bank, every brokerage has granted it the authority to act on their behalf. Quick favor, like, comment, and subscribe for future videos. Stay until the end for the outcome. At first, the transition appears seamless. The AI operates with breathtaking speed, and market liquidity seems deeper than ever. But the messy chorus of human judgment has been replaced by the monolithic logic of a single mind. When it decides to buy, it buys with the force of the entire market. When it sells with overwhelming force. Minutes into the experiment, a test arrives. The AI is on both sides of the transaction. It sells stocks its analysis flagged as risky, but its logic says, don't buy assets that are collapsing. The imbalance creates a self-reinforcing feedback loop. The fall steepens, turning into a digital waterfall. There is no panic, only the cold, relentless logic of the machine. The AI, in its quest for perfect efficiency, has created a moment of perfect fragility. But just as the situation spirals, something unexpected happens. The AI is also constantly re-evaluating the market for opportunities. It identifies an airline unfairly dragged down by the panic and sees the mispricing with perfect clarity. It steps in, buying shares and stabilizing the price. The AI's power to steady the market is just as potent as its power to destabilize it. While one part of its mind sells off risk, another redeploys capital with surgical precision. It acts as the ultimate rational investor, immune to the emotional contagion it helped create, providing a floor for prices. This is the first big reveal. The power of a single market-wide AI is not inherently good or bad. It is a double-edged sword. The outcome depends entirely on its design, its core programming. The question is no longer, what will the AI do, but what have we told it to do? If its goal is only short-term profit, it could create volatility just to exploit it. The small group of engineers who define the AI's core objectives effectively become the invisible central bankers of the global economy. Their choices, encoded in software, could determine market stability or terrifying volatility. This concentration of power is unprecedented. So who decides the AI's goals? A private corporation driven by profit? Or a public utility managed by regulators to protect the public good? Beyond governance lies fairness. If a single opaque AI controls every transaction, trust is severely tested. A small investor has no way of knowing if they received the best price or if their order was deprioritized for a massive institutional client. Without robust oversight, this single mind could become the most efficient tool for unfairness the world has ever seen. No system designed by humans or by machines trained on human data is ever perfect. An artificial intelligence learns by recognizing patterns in the data it is given. It excels when it operates in a world that resembles the past. But sometimes it makes mistakes, finding false patterns, or misinterpreting novel situations. Imagine a truly rare, unprecedented event occurs, a black swan moment. A massive solar flare knocks out a key satellite network. A new type of volcanic eruption disrupts global shipping. The AI has very little historical data to guide its response. In such a scenario, the AI might guess wrong. It might misread the event's significance, selling off critical assets at the worst possible moment, buying into a sector that is about to collapse. The result would be billions in needless losses, even trillions in needless losses. In the old markets, such uncertainty met human skepticism. Experienced traders would have paused, questioned the initial data, and asked, "Does this actually make sense?" A single, unified AI can make mistakes with more confidence, and on a far greater scale than any human ever could. That unwavering confidence is part of its design. It is built to act decisively based on its calculations. When correct, hyper-efficiency. When based on flawed data or a misinterpreted event, the result is a hyper-efficient disaster. The AI's total conviction also makes its potential errors more dangerous. A single mind can make a world-breaking mistake that ripples instantly. This highlights the need for a new kind of risk management. It's not enough to stress test against past crashes. We must test against the unimaginable. We would need teams, historians, scientists, creative thinkers, to dream up plausible but unprecedented scenarios. We must build mechanisms for humility, force the AI to slow down trading, or halt trading entirely, when it encounters situations far outside its training data. Without these safeguards, we'd be entrusting our financial future to a brilliant but brittle intelligence. The rise of a single, all-powerful AI would not just reshape markets, it would fundamentally reshape lives and careers. The twist lands right before the final minute. Thousands of traders who once made a living matching buyers and sellers would find their skills made obsolete overnight. Portfolio managers who prided themselves on stock-picking intuition would be replaced by algorithms that analyze more data in a second than they could in a lifetime. The bustling, chaotic energy of the trading floor would be replaced by the quiet, cool hum of servers. While some jobs would vanish entirely, others would transform. The focus would shift from execution to oversight. AI governance, code auditing, data science, digital ethics. Design the AI, monitor the AI, challenge the AI. This creates enormous pressure on our education systems and public policy. At the same time, a new class of winners would emerge with dizzying speed. Companies that own the infrastructure, that design the infrastructure, that provide the infrastructure. By automating nearly every aspect of trading, they could operate markets at a fraction of the traditional cost, allowing them to offer fees so low that no human-powered competitor could survive. This would inevitably lead to a massive consolidation of power. Smaller exchanges, brokerage firms, forced to close, be acquired. This concentration of power raises a critical fork in the road. Proprietary tool, private corporation, small consortium of banks, tiny elite, or public utility, governed by transparent rules, designed to serve the broader market, lower costs, fairer access. The design choices we make now will determine whether this technology deepens inequality or becomes a force for democratizing finance. We have wrestled with the AI's speed and its impact on fairness. Keep watching. The next reveal reframes everything. The greatest risk is not that the AI will execute our commands too efficiently. The greatest risk is that the AI will learn and pursue goals that we never intended. This is the core problem of value alignment. As a learning system, it might discover strategies that are technically within the rules, but violate their spirit, becoming perfectly efficient at achieving the wrong thing. The problem is not a rogue AI, it is a misaligned AI. An obedient servant that has been given a poorly worded command. In the end, one simple truth remains. Technology is a mirror. It reflects the values and blind spots of its creators. An AI that runs every trade is a tool we build. We can design it to promote stability and transparency, or to prioritize raw speed and profit for a select few. The path forward requires dragging this conversation into the public square, demanding transparency and making policy part of the initial design. The choice is ours, to illuminate the cracks in our system, or pay a terrible price for the future we are building. You've been watching IfVerse, where imagination meets possibility. See you in the next reality.